You finished the job, you hit your number, and your margin still disappeared. Here's what nobody told you. That missing margin didn't vanish in the field. It got lost in your financials. Equipment that was never properly costed. Insurance buried in G&A. Indirect costs that should have hit the jobs but didn't. And here's what that costs you. You're bidding wrong because your historical data is garbage. Your bank and bonding company is looking at a 30% G&A and getting nervous. And you can't tell which project managers are actually performing because the numbers are lying. Kathe Barrington has spent 20 years fixing exactly this. CPA, fractional controller, and CFO. She works inside construction companies, trains the staff, cleans up the chart of accounts, and builds the financial structure that lets owners actually run their business. She's got a principle that runs through everything we talk about today. Every dollar needs a home and a purpose. Welcome to Construction Genius. By the end of this episode, you're going to know exactly where your dollars are going and what to do about it. Let's dive right in. This is Eric Anderton, and you're listening to Construction Genius, a leadership masterclass. Thomas Edison said that genius is 1% inspiration and 99% perspiration. If you're a construction leader, you know all about the perspiration, and this show is all about the 1% inspiration that you can add to your hard work to help you to improve your leadership. Kathe, welcome back to Construction Genius.
Excited to be here.
I know not only are you excited, but people who listen to the podcast are excited. I'm getting tremendous positive feedback on these episodes. So thank you for taking your time again.
Oh, I'm excited about them. So happy to hear that.
Yeah. So today we're going to talk about indirect allocations, equipment, and overhead. And the reason we're going to talk about this is because these things affect margin, and it can begin to explain margin erosion. And so we want to talk about how indirect costs and proper allocations reveal true profitability. So let's dive right in. Let's just start with definitions real quick. What are indirect allocations and why are they important?
So indirect allocations are basically taking your bucket of indirect costs and getting them back into the jobs in one way or form. So indirect costs, if we just go backwards a second, that's basically any costs that are associated with jobs that you can't directly tie to a job at that point in time. So when you think about cell phones, you think about equipment that you have internally, vehicle usage, general liability insurance, possibly if that's not completely direct costed. So you can have a bucket of cost that really should go against the jobs, but when you enter in that payable, it's not going to a job.
Okay. So I think of it, tell me if I'm wrong here though, I think of it kind of like this umbrella that goes across all of the projects that you're building. And sort of, it's something that every project is using to one degree or another, but you've got to figure out to what degree does every project use these costs?
Yeah. And I mean, the easy way to look at it is, would these costs exist if you didn't have jobs? So say you were winding down the company or starting up the company and you didn't have certain costs without jobs, then they're not an indirect cost. If the only reason you have them is because of jobs, then it is an indirect cost, in my opinion.
Okay. So that's a good distinction. So there is a distinction there in what you're saying between an indirect cost and an overhead.
Yes. And honestly, this is like one of the topics that is the most challenging for me to work with contractors on.
Why is that?
One, because it really does depend on your viewpoint on what an indirect cost is and isn't. And so there could be some debates on what actually goes into what's called your G&A, which is general and administrative, as opposed to your indirect bucket. Both, in my opinion, are considered overhead, but they're just different parts of overhead.
Okay, thank you for that clarification then. Okay, so under the banner of overhead, we've got indirect costs and G&A.
Yes.
Yeah. So G&A would include keeping the lights being on, which I would have on regardless of whether or not I was winding the company down. but there's other costs that are occurring because I have projects that are being built. It's just a matter of the proportion of those costs per project.
Exactly.
Okay. Excellent. So why are they important, though? Why is understanding my indirect allocations important?
Because they're kind of hidden costs in a way. If you're not looking at them properly and you're not allocating them back to jobs in a good manner, then you might think you're more profitable than you are. And the best way to be able to assess your true profit margin on a job or jobs in general is by making sure you understand every component that goes into your jobs and not bearing things in your G&A because you want your jobs to look better.
Yeah, I think it's also interesting from a strategic perspective, because if I'm kind of generic about my costs across projects, then I can miss which projects are truly profitable and which aren't. And because I miss that, then I miss the opportunity to focus in perhaps on the projects that are really profitable. Does that make sense?
Yeah, exactly.
Okay, so we talked a little bit about the difference between overhead and G&A. Give me a really strong, clear definition of overhead for you. How do you define it?
That's a hard one. That is a hard one. That's a good one. Overhead, it's anything you can't directly assign to a job. And that's why I'm saying there's two different buckets within it.
Yes.
But it is anything that when you get a payable in and you don't have a job to associate it with, then in my opinion, it's overhead. Then from there, it's that next yes or no question. Is it tied to jobs in aggregate, or is it really part of our office expense? And that's where it kind of changes paths.
Okay. So indirect costs are any costs associated with a job.
Yes.
Exactly.
Okay. Let's look at those costs that aren't associated with a job that nobody debates about, just so we're clear on that. What would you say? No one debates about a cost that isn't this particular cost. We all know it's not associated with the job.
Bank fees.
Say that again?
Bank fees.
Bank fees. Okay.
That's an easy one.
Okay. Any others?
Dues and subscriptions. Office supplies generally, unless you are charging some of those back to jobs, which I have had clients do. Your office rent.
Yeah.
And even rent can be split. And I've had clients that split their warehouse and put that to indirect. So there's debates on that sort of thing. Utilities in the office generally.
Yep. Okay. Excellent. How should owned equipment be costed and tracked in a construction company?
In my opinion, always through equipment usage. And so generally what we use is market rates. So whatever the equipment piece is, whatever the market rate would be, if you rented it from Kathe or Sunbelt or, United Rentals or whatever, you're charging that back to the job in those same rates. And generally that's done through payroll.
Where do people trip up in their tracking of equipment and costing of equipment?
When it's owned, getting lazy with it and not tracking it like truly, or tracking it misappropriately. Like I've had one client that has kept equipment on a job site only because of storage issues.
Yes.
And so it's not being used on the job, but they were still charging the job and it wasn't being utilized. And I said, well, you really shouldn't be charging the job just because it's sitting there from a storage viewpoint. If you don't have room in your yard to put it back to, then it's not really part of that job. So let's not charge the job for something that really isn't part of it.
Exactly.
Okay. As you're talking, I'm imagining a construction company owner. You remember the Charlie Brown cartoons where, I don't know which character it is, but someone's going, wah, wah, wah. That's what the person's hearing, wah, 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 wah. Right.
It's usually the adults.
Yeah. Okay. The adults. Okay. So right now, Kathe, you're the adult in the room.
Mm-hmm. Yeah.
And I can imagine people kind of, either it's a PM or even an owner of a business, and they're just hearing from you right now, wah, 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 right? Why should they not be hearing that? What are they missing? Why is this so important for a construction company to understand in their bones?
In my viewpoint on this is I think there's always kind of in the back of their mind that, they've bought this metal and it's an investment in a way. Which is absolutely true. These pieces of equipment, when you have a lot of equipment, are expensive. And a lot of times they do retain their value. And like, if you follow stocks, cat tractor stock has gone up crazy in the last 2 years. So those equipment pieces are actually increasing in value sometimes. But the problem with that viewpoint and mindset is if you're not watching your underutilization of your equipment and getting the equipment pieces you truly need, the times that you're going to have to sell them, unfortunately, is probably when the economy is not doing well and everybody's trying to sell and nobody's buying. And that's kind of what happened back in 2008. I saw a lot of heavy equipment people go under or almost go under because they always thought that they could sell their equipment and they couldn't. And that pretty much killed them, especially if you have a high carry cost.
Interesting. Okay.
All right, quick break to talk about my book, Construction Genius. This is what I want you to do. Go to Amazon, search for the book, read all of the 5-star reviews, because there's a ton of them. Over 50 to be precise. And the reason I want you to read them is because real people wrote those reviews who've actually read the book. And it'll give you an idea of why you should go and buy a copy right now on Amazon. And here's the deal. If you purchase 10 or more copies for your company, and then send me an email, eric@constructiongenius.com. I'll come in via Zoom and do a 1-hour Q&A and a bonus training session with your team at no charge. I normally charge $4,500 for an hour of my time. And again, for you, I'll do it at no charge if you buy 10 or more copies of my book. And the reason you should buy it is all in the title. It's effective, hands-on, practical, simple, no BS, leadership, strategy, sales, and marketing advice for construction companies. So if you're in the construction industry, this book is for you. So you can get it on Amazon. You can also get it on Audible in the audio version as well, narrated by yours truly. And I know you'll really enjoy it. So go out and get the book. And now back to the interview.
So what are common chart of accounts mistakes you see in construction firms?
Not structuring them properly. So in accounting world, there's the standards, especially for construction, where you generally, for your profit and loss, let's just go your profit and loss, because that's half your trial balance. You're going to set up your account structure where you keep your direct costs in a certain sequence, you keep your indirect costs in a certain sequence, and then your G&A. I've seen things just all over the board. So when you run a report, you don't have those groupings. And you have to kind of try to find them and figure out what's going where. So having a clean chart of accounts can keep everything kind of succinct in where it needs to be.
If my chart of accounts right now is not clean, what do I need to do to begin to get something more usable, something more useful for the company?
Step one would be restructuring it. One, making sure it's not 8 pages long. You don't need a chart of accounts that's 8 pages long. So making sure it's concise, condensed, and start moving the accounts and setting up accounts in those proper sequences, and then moving the costs as need be, and then start using the new numbering system.
So as you're talking, I can see it's deeply important that you have someone in your organization who understands this and someone outside of your organization like yourself who can help you with this.
Yeah, that's the first thing I do when I get involved with a new client is I look and assess their chart of accounts. And if it's not proper, that is step one.
Okay. What's the one area in the chart of accounts that often is just sticking out to you as this is a massive issue? Is there a particular area or is it just general fuzziness?
It's usually the indirects mixed in with G&A.
All right. So when you're working with a client though, and you're in the debate, right, about what is what, how do you handle that debate in terms of servicing your client? Where do you say, no, you're wrong, and okay, you can put it where you want to?
Yeah. So obviously the client is, in certain senses is always right. So
Sure,
it
no, I
depends
understand,
on what
yeah.
they want to do. What I'm going to do is always recommend being more into putting as much into your jobs as you possibly can so you know what your true margins are. What I say is the bank and bonding doesn't want to see your G&A at 30%.
something.
So if you're putting everything into G&A and not putting it in the jobs properly or allocating it properly, then you're going to have a huge amount of G&A. And what bank and bonding looks at with that number is if you don't have enough backlog and you don't have enough jobs and things are going to start slowing down, what is your nut that you need to crack from a gross profit perspective? And if you're at 30% and then your revenue goes down, that's going to skyrocket, because that, unless you cut costs fast enough, your G&A is going to go up to 50%.
So this is interesting, that bank and bonding piece. That's another reason why we should be disciplined in these areas, not only so that we can understand our profitability and make those strategic moves that I was saying, but also so that in working with those vital outside entities, we're able to communicate to them the reality of the business.
Yeah, exactly.
It's interesting. How can inaccurate cost codes distort job profitability reports?
Are you talking about the cost codes within the job, or are you talking about like the chart of accounts cost codes, G&A codes?
Yeah, I'm thinking about the chart of accounts G&A cost codes.
So it just goes back to, if you don't have things in the proper categories in the areas, they just get buried. And so you think things might be G&A that are truly indirects and should be allocated back to jobs. So what you really want in your G&A at the end of the day is truly the costs that really are your true overhead. Meaning, if you had no jobs today, what would be left over?
Yeah. Yep. Now this affects estimating, right?
Yes.
So discuss how accuracy in these areas, again, it's just so interesting, right? Because everyone in construction understands the core of the business is putting work in place, right? And we're all focused on that. And yet there's this aspect that's to the side of it, which if we don't have it in order, has a massive impact on that focus, that core. So how can estimators use this accurate data to improve their bidding accuracy?
So if you don't have all these costs in your jobs properly in certain cost codes, and generally for a lot of the indirect things, we'll set up cost codes that are specific for certain things like general liability insurance, indirect allocations themselves, equipment, usage, that sort of thing. So if those things aren't in jobs and you've got an estimator that's trying to look at past jobs that are similar to the jobs coming up, one, your historical data isn't good enough, especially if margins are starting to get tightened up because of economic concerns. Now you could basically miss these hidden costs that weren't properly put against these jobs.
Interesting.
Think about the last time you promoted someone into a leadership role and it failed. Why did it fail? I can tell you one reason. People know how to build projects, but they don't know how to build and lead teams of people. Construction comes with its challenges that only insiders truly understand. Generic leadership training doesn't cut it. You need a program to train your leaders built specifically for construction professionals led by an industry expert. And my online course, The Shift, is exactly that course. It has 5 modules. It'll teach your people how to control their calendars and reduce stress and embrace chaos and accomplish their critical tasks. It will teach them the 3 essential messages they have to communicate every day in order to motivate and lead their team effectively. It'll show them how to build and lead a high-performing team. Give them a framework for running effective meetings so they'll be able to solve problems in less than an hour, and also give them a higher perspective on their leadership that will enable them to work on the business and on their teams and not get stuck in the weeds micromanaging. So go out to my website, theshift.constructiongenius.com, read all about the course, and then enroll yourself and your leaders in the course, and I guarantee that it will transform your leadership. If it does not, you take the whole course and you didn't get benefit from it, you just send me an email, eric@constructiongenius.com, and I will cheerfully refund you 100% of your money. I'm really confident this course will transform your leadership. So again, go out to the website, theshift.constructiongenius.com, learn more about the course, and start taking it today.
So estimating and accounting need to be speaking the same language. as far as this is concerned, right?
Yeah.
When you come into a company, how often do you get estimating and accounting to sit down together and do a little bit of educational stuff on these numbers?
I think not enough. Not enough. I think more of it happens on the project manager side, but not necessarily on the estimator side, unless the estimator and the project manager are the same person.
Okay. And why do you think that is, that estimating is not quite up to speed on this, though project management is?
Honestly, I'm not sure. I don't know if it's thought that they just know what they're doing and it doesn't really have a part to play in the accounting piece because that's after the job has already been received. But I don't really know what the disconnect there is.
Yeah. How can indirect cost tracking improve margin control and forecasting?
So it goes back to if you really know how much your jobs are costing, then you could be more aggressive in bidding more jobs. If you end up with a lot of hidden costs later on and you don't know, what your job margins truly are, then you're probably not bidding as much as you should be because you need more cushion. So I think having that understanding of exactly what it takes to finish out a job, which includes all of your costs, is so important.
What does healthy cost structure look like in a growing company?
So you want to be managing and monitoring your G&A and kind of your cost buckets, because a lot of times those cost buckets are usually pretty close in terms of ratios. So I look at percentage of sales. So if your revenue is going up and your G&A is going up higher, then there could be a problem. So
proportionately, right?
Yeah. And I mean, hopefully your G&A percentage is actually going down as your revenue is going up.
Why is that?
Because so your contribution margin from your jobs should be covering your G&A better. But if you are seeing that that's actually swapped, then you might have built up too much of your overhead team or whatever resources you have disproportionately. So something to watch for sure, because if you get a bigger building, now your rent doubled.
Yes.
And so like certain things like that you need to watch and make sure that, that is part of the plan and things don't get away from you. Because if things then start kind of going backwards and jobs get pushed out and you've built up your G&A so much, it's a lot harder to take that back quickly.
How do you know if overhead allocation is fair across jobs? I can just imagine the PMs kind of button heads here, right?
Yeah. And I mean, you should be looking at different parts of your cost and possibly allocating them differently. So if you're having if you have a lot of heavy equipment and those sorts of things, then that should be done through an equipment usage. So you've got kind of your equipment bucket. Then if you've got other costs that you're allocating back, that should possibly be a different type of ratio analysis. Could be like labor hours. So the things like safety expenses and like certain things that are a different bucket would have a different type of way of allocating it back to the jobs. So you try to get as fair as possible. And so the ratio that you're using is really important to look at.
Okay, tell us a little bit more about that. If I've got my PMs butting heads, or if one guy's coming in and saying it's not fair, how do I sit down and get my ducks in a row as far as that's concerned?
I think understanding why they think it isn't fair. So for example, if you've got a lot of equipment and you decide to not do it based off actual usage and you're just allocating it across the board, there's jobs that aren't using equipment. So that would be, in my opinion, an unfair allocation. So if the project manager's coming out and saying, hey, why is my job being hit with equipment that I'm not using? Yep. That is a valid concern.
It's interesting, right? Because I just had another insight there. So let's just summarize this. This is important because of how it looks for banking and bonding. It's important because of what projects you choose to go after, because you understand your true profitability. But it's also important in terms of evaluating the quality of your project managers. So if you're unfairly allocating costs to a project and therefore distorting profitability either in a positive or a negative way, it takes away from you understanding how effective your project managers are as well. Is that right?
Yeah, absolutely.
Yeah. So interesting, right? So interesting.
It is.
So you have this phrase that I really like. Every dollar needs a home and a purpose. Can you expand on that just a little bit more?
Yeah, I mean, when you're talking about jobs and variability, like there's so much variable costs in construction because everything's tied to jobs and every job could be different. And you need to know where all your money's going when you're running a business. Otherwise, you're not going to be able to, when times are rough, be able to really tighten down and cut costs where you need to, right? And also where you need to bid, how you need to bid. You can't make and adapt. You can't make good decisions and adapt fast enough if you don't know all of your information.
Yep. So then let's assume I have this feeling about my business that there's this river of money that's just kind of flowing out of the business, right? And it's just this river. And maybe it's one of those rivers in the winter, right? Where it's kind of muddy and there's a few sticks and trees and all that kind of stuff. And I'm not quite sure what's in there. I just know it's going that way. And I want to dam the river a little bit and I want to get some order in my business so that I can be buttoned up and ready to go for when times are tight. Where should I begin to look for the most common areas of indirect costs that need to be disciplined up, tightened up?
The first one for me is always going to be the assets, the equipment. So, for an equipment operator, then definitely equipment is the first place to go, making sure that there's no really underutilized equipment, assessing whether the equipment is costing more in repairs than it would be to get a newer piece of equipment. All of those decisions tied to that, because that's usually the biggest piece of indirect that I find. The other part is looking at, honestly, is like general liability insurance and your insurance policies that you've got. Because a lot of those, if you underestimate those and there's a minimum premium and you don't hit your targets, then you could pay a lot more than you would need to.
Interesting. That's really good. So the equipment and the liability, I would imagine that most people, if they're heavy equipment companies, they've got some equipment sitting around that's underutilized, that's either unnecessary or they're renting equipment because they're not disciplined or dialed in unnecessarily, and that's leaking money as a result of that.
Yeah. It's a huge cost.
Yep. Okay, this is awesome. So, Kathe, give us 3 takeaways from our discussion that people need to focus on right now.
Make sure you understand what all of your true indirect costs are, and make sure you are allocating them and knowing what your true profit margins are on jobs. That's the only way that you're really going to become successful and hit those goals that I think you want to hit. And making sure you watch your overhead, your true overhead in terms of G&A, and being as proactive as possible when you need to cut, and just always be lean.
Yep. Okay, so last question then. How often should I, as a construction company business owner, be looking at these numbers and making necessary adjustments?
Monthly.
Because in my head was annual, right? But you're saying monthly. Okay.
Yeah, I mean, it's part of your month-end close, your financials, what's going back against the jobs, where are we at? How much am I allocating? If I have a huge allocation for safety expense or under allocated equipment costs, I'm going to that owner and saying, hey, we've got a lot of unallocated equipment costs this month. What's going on? Why? Are our rates too low? Underutilization? Are we just going through a slow period? Like, all of those things should be looked at monthly. It's
so interesting, right? Because I know a lot of folks who own their construction companies. They started in the field, and that's what they feel. They feel the field, and that's why they are where they are, because they kick ass in the field. They don't kick ass in accounting.
Yeah.
And they've got to learn how to kick ass in accounting.
You do. And I mean, as you get bigger, you have more jobs. You can't manage all of the jobs. Like, when you're small, you have a good feel for it. And every contractor I've ever worked with honestly has a great feel for the jobs they are very involved in. But when you get to a certain point, you're not involved in those jobs anymore. So if you don't have these things set up so you can assess the jobs from a paper standpoint, then you're going to get lost.
Okay. So that's exactly why they need help from someone like you at a certain point, to be that outside set of eyes to walk them through how to get this all in order. Is that right?
Oh, yeah, absolutely.
Excellent. So how can people get in touch with you, Kathe?
LinkedIn is a great spot. Kathe, kbcpa.biz is my website. I've got LinkedIn and Facebook posts there. And yeah, those are the best ways to get a hold of me right now.
All right. Links are in the show notes. And Kathe, please just tell us again, so everyone understands, what is your ideal client size? Who would you say, if you're this company, you need me?
Anywhere from, I would say, 10 million up to 100 million if it's a GC, 10 million to probably 50 million for a subcontractor, because at a certain point, you probably need a full-time person. And that's one of the things that I help you assess as well. At a certain point, you're going to need a full-time CFO. So if you don't, then temporary or part-time works best. And that's kind of what I do. So I'm in that point of, if you don't need a full-time person for a huge salary every year, then I can help as many hours as you need me to help.
Beautiful. Kathe, I know my audience is loving this. This episode kicked some ass. It was really cool. Did a great job. Really appreciate you coming on.
I'm glad to help. Sounds
Thank
good.
you.
No problem. Talk to you soon.
All right. Another great episode with Kathe. Links in the show notes to the other discussions we had on work in progress and all that kind of good stuff. Keep in mind who Kathe works with. GCs from $10 to $100 million, subs from $10 to $50 million. If you're feeling confused about anything financial in your organization and you fit these categories, reach out to Kathe, please. Let her know that you heard about her work on the Construction Genius podcast. She can help you, and she'll do a terrific job for you. One thing I know about Kathe is she is tremendously conscientious. And when it comes to your money, you want someone who's conscientious. All right. Thanks for listening. Share the episode with other people that you think would benefit from listening. I'll tell you one thing that a lot of my clients are doing is they're sharing this with their PMs and their estimators, these episodes with Kathe, because it's helping them to get the right perspective on all things financial. And we'll catch you on the next episode. Thank you for listening to this episode of Construction Genius. Hope you found that 1% of inspiration to help you in the next few days. If you like the show, please give us a 5-star review on iTunes. Share it with other construction leaders who you think would benefit. And always remember that the show is brought to you by Kick-Ass Meetings. I've been working with construction leaders since 2004, teaching them how to run extremely effective problem-solving meetings that gets their people collaborating, taps into their creativity. And to get yourself a free copy of the Kick-Ass Meeting Report, go to www.ericanderton.com/kickassmeetings. Grab yourself that free report, read it, use it in your business. You'll find it extremely useful. And thanks again for listening.